Folks, remember when your kids told you the internet was just for nerds and criminals? Well, here we are. You're probably watching this video on that same dangerous internet while shopping online and video calling your grandchildren. The exact same thing happened with Bitcoin, and boy, do I have some eye-opening news for you about who's really buying it these days. Spoiler alert, it's not who the media told you it would be. Today, I'm going to bust the biggest myths about Bitcoin buyers and show you the real numbers. Trust me, you're going to be surprised. Let's start with the elephant in the room. The biggest myth is that Bitcoin is mainly used by criminals and drug dealers. Yes, Bitcoin got early notoriety through sites like Silk Road, an online marketplace that operated from 2011 to 2013. But here's the thing, and this is important. Blaming Bitcoin for criminal activity is like blaming the dollar bill because it's used in drug deals. Think about it. Cash has been the preferred payment method for criminals for centuries. Does that make your wallet full of 20s inherently evil? Of course not. The real reason Bitcoin got such bad press wasn't because it was actually more criminal than cash. It was because governments and traditional banks were scared. Here was a form of money they couldn't directly control, print more of, or shut down at will. So what did they do? They launched what you might call a good old-fashioned smear campaign. It's the same playbook we've seen before. Remember when credit cards were too dangerous and online banking was asking to be robbed? Before we dive into who's buying today, let me explain something you'll hear a lot. HODL. It started as a misspelling of hold in a 2013 forum post, but it became a philosophy. Hold on for dear life. This HODL mentality encourages long-term investment rather than panic selling during market downturns. It reflects a belief in Bitcoin's long-term value proposition despite short-term volatility. And here's what's remarkable. Over 75% of Bitcoin is now held by long-term holders. Over 30% hasn't moved in more than 5 years. These aren't day traders gambling away their retirement. These are people who believe Bitcoin is digital gold for the internet age. Now here's where it gets really interesting. Fast forward to 2025, and the landscape has completely changed. The question isn't, who's buying Bitcoin? Anymore, it's who is not buying Bitcoin. Let me give you some numbers that'll knock your socks off. BlackRock created the world's largest Bitcoin fund with $50 billion in assets. MicroStrategy holds over 331,000 Bitcoin, worth more than $30 billion. And Tesla still holding over 11,000 Bitcoin on their balance sheet. Let's pause there for a second. Bitcoin is an index of money laundering. This famous quote was made by Larry Fink, CEO of BlackRock, during a CNBC interview on October 13, 2017. The full context of his statement was that Bitcoin just shows you how much demand for money laundering there is in the world. Fast forward today, and Larry Fink now calls Bitcoin digital gold and a legitimate financial instrument. What a turnaround. Here are some more numbers to get your head around. JP Morgan Chase, over $200 million in Bitcoin ETFs. Goldman Sachs, $418 million debut in the Bitcoin ETF market. Morgan Stanley, $270 million in Bitcoin holdings. These aren't exactly the kinds of institutions that get into the crime business, if you catch my drift. 2024 marked a watershed moment with the approval of spot Bitcoin ETFs. A spot Bitcoin ETF lets you invest in Bitcoin through a traditional stock exchange, just like buying shares of a company. Instead of you buying and storing the digital Bitcoin yourself, which can be complex and risky, the fund does it for you. The fund buys and holds actual Bitcoin, and its share price tracks the real-time price of Bitcoin. This allows you to gain exposure to Bitcoin's price movements within your regular investment or retirement account, offering a simpler and more regulated way to invest without needing to manage digital wallets or private keys. Professional investors, the folks managing over $100 million, now hold $27.4 billion worth of Bitcoin ETFs. That's a 114% increase in just 1 quarter. Think about what this means. The most conservative money managers in the world, the people handling university endowments, pension funds, and institutional retirement accounts, are buying Bitcoin. Harvard University's endowment, Yale's endowment, major pension funds across Canada and Europe. When the folks managing money for professors' retirements and students' education start buying Bitcoin, you know something fundamental has changed. Here's the truth. Bitcoin has gone completely mainstream, from governments adding it to their reserves, to Fortune 500 companies putting it on their balance sheets, to your neighborhood bank offering Bitcoin ETFs. This isn't the fringe technology it once was. The criminals and nerds narrative was always overblown, but now it's completely obsolete. When J.P. Morgan, the same bank whose CEO once called Bitcoin a fraud, is holding hundreds of millions of dollars worth, you know the tide has turned. Today's Bitcoin buyers include sovereign wealth funds, major corporations, traditional banks, pension funds, and regular folks like you and me using apps like PayPal and Cash App. The question is not whether Bitcoin is legitimate anymore. That debate ended when BlackRock launched a Bitcoin ETF. The question now is whether you want to understand this financial evolution or watch from the sidelines. Remember, you don't have to buy a whole Bitcoin. They're divisible to 8 decimal places. But understanding what's happening isn't optional if you want to stay informed about where money and technology are heading. The criminals didn't adopt Bitcoin. Wall Street did. And that tells you everything you need to know.